Tesco and Carrefour announced plans to enter into a strategic alliance this week. The aim is to use their joint clout to reduce costs and prices on the shelves. Richard Lim is the Chief Executive of Retail Economics and joins me now. Richard, thanks so much for coming into the studio. So what does a strategic alliance actually mean, and what do you think they're hoping to achieve?
I think first of all it's important to put this into context. So the environment for UK grocery is fiercely competitive, and like typically supermarkets like Tesco's, Morrison's, Asda, they work on net margins of between 3 and 5%. So essentially this is about a reaction to structural changes in the market, the entrance of players like Aldi and Lidl, who have essentially doubled their market share over the last 8 years. So forming a strategic alliance is about driving operational efficiencies, driving down costs, and essentially passing some of those costs onto consumers, some of those savings onto consumers, to really remain competitive in the marketplace.
So are there any competition concerns at all around this alliance, and do you think it could be a precursor to a merger?
Well, it's a really interesting point, and this is the first time that Tesco's has entered into one of these strategic alliances. And I think it's important to understand that there's lots of complexities with this. These are two giant players in the global market. They're around about the 5th and 6th biggest players in the global grocery market. So their combined market share will put them in second place behind Walmart. So there's lots of opportunities there, but there's incredible complexities about joining the two businesses together as well.
Now, we saw slightly slowing growth from Sainsbury's this week in its trading statement. I'm wondering what you made of the numbers, because to me it seems as though the only way to grow in this market is inorganically.
It's a tough market at the moment. A lot of their growth over the previous quarters was flattered by food inflation. So food inflation reached a 5-year high at the end of last year, and it's now fallen to about 3%. So a lot of that growth is coming out of the market, but a lot of those price cuts as well coming out from the statement from Sainsbury's have been passed on to consumers, and we're seeing that impact on their top line growth.
Now let's talk about that big deal, Sainsbury's and Asda, that mega merger. Do you think it will go through?
Well, again, it's really important to put in context of what the CMA is there to do. And the CMA are there to protect the interests of consumers. And essentially, this is about combining the two businesses together, driving operational efficiencies, trying to have a harmonisation across the cost base for both those businesses. And on that basis, they feel that they can deliver a 10% reduction in prices across some core consumer products. But again, this is in a reaction to fierce competitive conditions and structural changes from the shift towards online, the discounts coming to the market, and also the role of experiences as well.
And do you think that Argos will fit better with Asda then?
It's a complementary tie-up. So not only is it complementary in terms of the geographical spread, Sainsbury's having a footprint in the south and Asda having a better footprint in the north, but the use of the store network to drive a really seamless omni-channel operation from Argos is certainly one of the key objectives, strategic objectives for them. And in terms of the core customers that serve both Asda and Argos, there is a better overlap in terms of those core customers.
Now, you've mentioned already this changing landscape, as we've touched upon, Sainsbury's and Asda, Amazon buying Whole Foods, Tesco and Booker. What does this all mean for the suppliers?
It's going to be a tough environment for suppliers, and we've seen consolidation in the market, and this is almost an inevitable evolution of what we're seeing in the consumer market, in the retail market. That realistically will then filter down through into supplier markets. We're expecting to see further consolidation between manufacturers and suppliers, but essentially again this is about driving operational efficiencies, and so we expect this to essentially be a difficult market for suppliers.
So what do you think could be the next move from Amazon after its acquisition of Whole Foods? Do you think it could set its sights on Morrison's?
They're certainly in a position where they will be looking to try to acquire a substantial footprint of stores in the UK. Whole Foods essentially makes more sense in the US. They've a larger store footprint in the US. Of course, that isn't the case in the UK. But I think whether or not they try to acquire a large food business in the UK, or this could be about non-food as well. But essentially, I think the play here is about acquiring a business that has a large store footprint in some of those primary and secondary locations.
Now, I've been seeing a lot of the supermarkets move towards their own brand products, away from those brands, like the likes of Nestle or Unilever, for example. I'm wondering what it might mean for those big companies.
Again, this is what we've seen over the last few years is a rationalisation of the number of product lines within retailers, and so a lot of that, a lot of the emphasis is towards own brand, having healthier margins, and so we expect to see that trend continue.
Richard, thank you so much. That was Richard Lim, Chief Executive of Retail Economics. Thanks so much for watching IGTV. I'm Victoria Scholar, and we'll see you very soon.
Subscribe to IG for educational content, company insight, financial analysis and expert commentary.